Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a very good day and a very good week of trading as well. And in today's markets, guys, well, it finally happened. Listen to this.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
There you heard it from Jerome Powell himself, right? Finally acknowledging the need for rate cuts. This has been something that he's been avoiding saying pretty much up front for essentially the last 6 to 9 months. Everybody knew it was coming, but now it's officially out of Jerome Powell's month. The rate cuts are officially on the table for the month of September. But as he stated, guys, in terms of the timing and the amount, those are still going to be up for deliberations. So obviously that news did wonders for the markets today. The market's largely ending massively green, SPY up a nice 1.06%, and the QQQ's also up a healthy 1.08%. So in today's video, guys, we're going to recap what exactly else Jerome Powell said at his Jackson Hole Symposium speech today. Thereafter, we're going to get into we have an earnings play before that. This was requested by one of our subscribers, so I figured I should include it in today's video. We're going to be covering Workday's earnings that had their earnings yesterday, up about 12% on the day, performing very nicely. After that, we're going to go through our major technical analysis rundown of our major stock market indexes, followed by our big tech names, and derive potential levels where we are interested in buying some dips if they do come very shortly. And then lastly, guys, go through my portfolio for the trades concluded today and how we remain positioned into the next week. And to wrap it all up, guys, I am going to be presenting the Discord features and functionalities that are all going to be right here. We'll do that at the end of the video. The Discord is going to be going live tomorrow for all of you who are interested. So without further ado, guys, a lot to cover today. Let's jump right into the action. So obviously we know SPY and QQQ having a very good day. Let's have a glimpse at the rest of the market. The rest of the market performing fantastically, led once again to the upside by semiconductors, NVIDIA with earnings next Wednesday. Big tech names largely green as well, except for Meta. On the bottom half of the market, very nice performance of rotation, right? Very nice rotation in healthcare. Down here, financials, and the bottom half of the market, and even energy, guys, getting some love. Really nothing was left behind today. In terms of your one-day relative, if my page will load, there you go. One-day relative, every single major sector in the green. 1 week as well as the rally pushes on everything in the green, except for energy due to a decline in oil prices over the past 2 weeks. And now on the 1 month relative performance, guys, we are now officially all but back in the green, erasing most of the losses that we've had over the last 1 month of trading. So the markets right now are looking quite decent. Before we get into more technical analysis, guys, let's jump right into what Jerome Powell had to say in that Jackson Hole meeting. So let's have a look here. Fed's Powell in Policy Shift says the time has come. That was pretty much the introduction video, right? Now, Powell said his confidence has grown that inflation is on a sustainable path to 2%. That we already knew. Meanwhile, he said, a slowdown in the labor market is unmistakable and the downside risks to employment have increased. So guys, this is also a first for Jerome Powell. He used to always say that the labor market was tight and healthy, but now he has said that it is unmistakably having a little bit of a slowdown. So finally, that acknowledgement that the market was looking for. While slower hiring, rather than a more concerning rise in layoffs, has so far driven the rapid rise in unemployment rate to 4.3%, Powell signaled the Fed would not countenance further erosion. We do not seek or welcome further cooling in labor market conditions, he said. We will do everything we can to support a strong labor market as we make further progress towards price stability. Now, Powell's new emphasis on protecting the job market raises the chance of a bigger cut, especially if the U.S. government's jobs report for August, due to be released on September 6th, shows further deterioration in what many policymakers have called a still healthy jobs market. Chair Powell's speech made it clear that there are likely a series of rate cuts on the way, and some could be of the 50 basis point variety. It's all going to depend on the data right here, guys. And the data points before the first rate cut are pretty much many at this point, right? So here's your Jackson Hole meeting today. We have a few more data points to go into. GDP for Q2, the revised version is going to be coming up at the end of the month. Then we have PCE, another jobs report right here, the JOLTS report, non-farm payrolls, and a CPI. So several more points of data to give the Fed the confidence in whether or not they are going to do a 25 basis point cut or maybe a 50 basis point cut to start it off. Let's continue in terms of the soft landing headline. For his part, Powell on Friday came as close as he is likely to in declaring victory over the outbreak of inflation that rattled the economy at the start of the pandemic. This is true, guys. Right? While the task is not complete, we have definitely made a good deal of progress towards restoring price stability, said Jerome Powell. With an appropriate dialing back of policy restraint, aka rate cuts, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. So Powell, obviously with the dual mandate here by the Federal Reserve, number one, maximum employment, right? Which they're now putting more of a focus on because that is now what's deteriorating. The other side of the mandate, ensuring price stability through inflation controls, that has largely been accomplished so far. So everything is going to be on the jobs market and the underlying strength of the economy moving forward. And they do have the tools for it, guys. Number one, they have the rate cuts, but do not forget as well, they also have quantitative easing, which is basically the money printer, right? So do not forget that. The Fed still has ample tools to combat any weakness in this economy right now. So that's pretty much everything that Jerome Powell had to say, guys. And for all of you who keep saying in the comments and on the channel, guys, the data is fake, the data is rigged, everything is rigged, politicians lobby for everything, right? Guys, everybody knows the data is rigged. I've said this many times on the channel before. This entire market is rigged. It has been rigged, guys, since the 1960s and 70s when everybody lobbied for all the rules and regulations that the SEC mandates Wall Street firms to. It's no secret at all, guys, that the market is entirely rigged. But this is a case of if you cannot beat them, you have to join them. The entire market process is geared so that the top end of the market, the rich, wealthy elite, maintain asset wealth, right? That is why stock prices continue going up. That is why people lobby heavily in Congress for rules and regulations for not only taxation laws, but also market structure laws to prevent their assets from eroding over time. Everything is geared towards that, guys. So even though you might be saying the data is rigged and the market is rigged, of course it is, right? Everybody knows that. Now, my question to you is, what are you going to do about it? Saying the data is rigged is one thing. If you do not believe the data, guys, if you thought the data was fake, well, you would have probably thought the data was fake all the way since last year, probably ending up shorting the market at every single rally. And look what's happened ever since, right? So the data might be fake and you might not believe the data, but the price action does not lie, which is why I always say, guys, we are not in the business of predicting economic factors. We're not in the business of predicting whether or not it's going to be a hard or a soft landing. Our job as traders and investors is to play the price action in these markets. If you're a long-term investor, the recipe is very simple. You don't need to listen to me, just listen to legendary investors such as Warren Buffett, Terry Smith, Charlie Munger, and Bill Ackman, and the list goes on, right? Buy high-quality companies or index ETFs like the S&P 500, put some money into it with every single paycheck and do that over the course of 20, 30 years. And I guarantee you, even with rigged data and a rigged market, guys, you will have a very large portfolio after the end of that time. If you are a trader, you have no business, guys, predicting a recession. You need to be dependent on price action as a whole. Now, can you implement some hedging strategies and whatnot? Absolutely. Can you go into cash if you don't like how the market's been performing? Absolutely, guys. But there is a recipe for every single trader in this market to be able to succeed, rigged data, rigged market, or not, right? It's all in your trading strategy and how you manage your risk. So hopefully you guys appreciate that little segment on that. So moving forward here, guys, let's jump right into workday earnings, and it's going to be a very good one. So moving into workday, guys, 12.5% up on the day after their earnings were released yesterday, and they actually had very good numbers. Not only did they have a double beat right here, they also increased guidance, not only for 2025, but all the way through 2027. And Wall Street really, really loved that. Take a look at their earnings beat, EPS beat by about 6%, and a nice little beat on revenue here by about 0.62%. Now let's dive into some of the headlines right here. Workday stock gains as software provider widens 2027 margin target. Very nice guide increase. We'll get into that right away. The shares soared 12% on Friday, one day after the finance and human resource software maker issued fiscal second quarter results that exceeded analyst estimates and announced plans to further widen its adjusted operating margin through 2027. Workday's revenue was up about 17% year over year. That is fantastic. Subscription revenue growth grew 17%, and net income right now stands at a cool $79 million, which is about 3.8%. Now, Workday has not always been a profitable company, guys. This is why we need to pay special attention to their net margins. As you can see, over the last 5 years, 4 of them have been net margin negative or very, very close. But in the last 5 quarters, they are now net margin profitable on a consistent basis, ranging anywhere between 4 to 6%. That will be improving, but it's definitely a step in the right direction to be finally a profitable company. With respect to guidance, Workday is now looking for an adjusted operating margin of 25.25% in the 2025 fiscal year, compared with the 25% forecast it provided in May. So tiny little increase in operating margin guidance right there. Here is your longer term guidance. This is why the stock popped 12%, guys, because when you increase long-term operating margin targets, it increases bottom line EPS and can have a positive impact on bottom line free cash flow as well. 2 metrics that really give the stock some lift, right? Those are 2 metrics that when you improve them, the long-term valuation projections, right, come down and the price targets become more manageable. So moving on forward, on a Thursday conference call with analysts, Zane Rowe, the CFO, said he expects the company adjusted operating margin to expand to 30% from 25, right, in the 2026 and 2027 fiscal years, as well as annual subscription revenue growth of 15%. Very solid. In September 2023, Workday said it was targeting 25% through 2027. So net little 5% increase and 5% over a couple of years, guys, especially in terms of discounted free cash flow models and valuation models alike, really makes a big impact. Moving on forward, we are relentlessly focused on scaling all of our processes across the company as we review our product and go-to-market initiatives. We're also becoming increasingly more targeted in our growth investments, balancing product development with go-to-market resources. AKA, they are controlling costs and managing costs a lot better than in the past. Why? We'll get into that at the end of the article. The increased 30% operating margin target was the big upside surprise, as it is now committed both sooner and greater than most were expecting. Moving on forward, conditions aren't perfect for Workday, however. Organizations are still being more careful than usual before agreeing to sign contracts. The headcount growth among the existing customer base has slowed down. This is not new, guys. Software as a service companies, especially enterprise resource management companies, have been all saying the same thing. Cybersecurity funds have been saying that companies are more reluctant to spend a lot of money on their offerings, and other companies such as CRM, which doesn't have the exact same software as Workday, but very close, right? Workday is more of enterprise resource management. So think of payrolls, human resource management, right? Finances, all stuff like that. Whereas CRM is more in terms of managing the client experience, not so much the internal workings of the business. So let's conclude right here. In fact, about this cost-cutting trend by other businesses, right? Being careful about their software spending. In fact, we think the current environment of IT spending and the environment we're selling into isn't something that's just been here the last couple of quarters. We think it's the new norm going forward. We are prepared because we have a great product. What he just said there, guys, is absolutely mission critical moving forward to investing in high quality software as a service companies. We need to be investing in the best of the best. If they're saying that companies are largely becoming more picky, and it's not just a trend that's going to resume itself to the last couple of quarters, it's going to be a trend moving forward, then you have to go with the companies that have the mandate of winner takes most, right? In terms of cybersecurity companies, you would only maybe go for one of the top 3 players in the game. In terms of enterprise resource management, maybe only the top 3 players in the game as well, right? Because it's going to start consolidating these industries together, right? So let's move on to some of their investor slides right here. As you can see, very large total addressable market of $142 billion. This company brings in about $7 billion per year, so they still have a lot of upside to attack a lot of these different segments. 95% gross retention rate at their customers, so their customers obviously love their products. They have a ton of different partners. They just acquired more partners, as a matter of fact, partnering with a large company such as Cushman Wakefield, Lowe's as well has been some of their major new clients essentially, right? And now if we move forward to their existing clients, you can see the list is very wide, right? A lot of very, very big major players in the game right now as a whole. So the company obviously is a veteran in the game by now. They have more than 70 million users under contract, more than 2,000 Workday financial management customers. Those are the big corporations, right? The $1 million clients, in other words. And in terms of the guidance for the business, right? We already learned that. But for fiscal year 2025, guidance of revenue of 14%, subscription revenue of 16% increase. That's very, very good. The 12-month subscription revenue backlog is going up about 14 to 15%. Look at their, do we have it right here? Their backlog, they did give some numbers for the backlog, guys. They have about, I think I could find it somewhere in here. Yeah, total subscription revenue backlog, right, for the company is about 21.58 billion. That's literally the next 3 years of revenue for the company, which is guaranteed. Very, very good report for the company as a whole. And one of the last things I wanted to highlight is their free cash flow number, $2.4 billion. Very, very decent free cash flow numbers. Gives them a free cash flow yield of about 3.5%, which is kind of what we're looking for. So this company, very, very solid company, nothing bad to say about them, as well as the fact that they're really improving their profit margins a lot in the last few years, guys. Take a look at these gross margin improvements, right, over the last 10 years, from about 50, mid 50s, all the way up to about 76. And their operating margins, which used to be negative, cost of goods sold were high, operating margins are now profitable and expanding ever so further. This measures the gap or operating margins, right? So I know that I've been saying the company is targeting between 25 and 30% operating margins. Well, those are non-GAAP numbers. These are the GAAP numbers, but still, if you were to put this curve on the non-GAAP reporting standards, you would find the exact same curve, guys, pretty much, right? It would just say 25, 30% at the end of this. Net margins as well have been increasing right here. These are one-time lined items. The net margins are not 19, 20%. They're actually closer to between 4 to 6%, but you can see very nice net increase from being a money-losing company to now finally in the last 4 or 5 quarters being a net margin profitable company. So the company is moving in the right direction, right? In terms of stock-based compensation, they do issue a decent amount of stock-based compensation, guys, about 14%, but it's not as bad as a company like Snowflake, right? Still very manageable. Their quarterly shares outstanding have been going up, so they have been diluting shareholders ever so slightly, but one of their competitors had done the same thing for a very long time, guys. Salesforce was notorious for this, and then activist investors stepped in and they said, stop doing that. And you can see Salesforce really stopped doing that, started buying back shares, increasing free cash flow, increasing margins over the last 2 years, and the plan is now working. So I hope to see somewhat of the same thing for Workday implemented soon. Now, in terms of the valuation here, guys, valuation is not all that bad, to be quite honest with you. In terms of your revenue growth, 14% per year through 2027. Their EPS growth, 16% per year through 2027. Very good growth for the company as a whole, guys. Take a look, very consistent EPS growth as a whole, very consistent revenue growth as a whole as well. Quite a solid business, if I say so myself. The balance sheet as well, the balance sheet is perfectly fine. Only about $3 billion worth of debt. They have about $2 billion in cash, and they do bring in over $2 billion in free cash flow. That was the trailing 12 months for this year, and their guidance for next year as well. We had it down here in the slides. Their guidance for the next year in terms of free cash flow should be about, it was right down here, same thing, right? 2.35 billion. So free cash flow is moving higher in the right direction. That is what we like to see. Now for the pure form valuation, guys, 2024 forward PE at the current share price, 259, about a 36.9. Appears high at a first glance, but when we divide it by their EPS growth rate, we get a PEG ratio of about 2.3. I'll remind you, anything under 1 is fantastically cheap. Anything between 1 and 2 is decent, and anything above 2 starts to get a little bit high. But this company is growing very, very well. The real time to buy this company, if you would have known the PEG ratio, guys, I didn't look at this one myself either, so I can't blame any of you. I didn't really present it at all on the channel, but down here, guys, was a very, very good discount, right? That was pretty much a discount of 20%. Take 20% off of this PEG ratio, and you get a PEG ratio of about 1.9, 1.85, right? That would have been a lot better PEG ratio. And also that would have been a also larger support zone, this major support area down here. Right now, in terms of valuation of the company, free cash flow yield, 3.5, that is the minimum that we're looking for. Usually you want to look for between 3.5 and 5. So right now, the company, in my humble opinion, guys, is kind of fairly valued. It's not very, very cheap. It's also not very, very expensive. your analyst estimates as well. A lot of analysts are above the current target, roughly around 288 to about 350. So let's call the midpoint about 310, 315. So there is some decent upside in this company, but definitely not as much as if you could have bought the stock down here, right? So I would be willing to make an attempt at this stock, play it a little bit, guys, but we need to wait for a little bit of a weekly higher low setup, right? So if in the event that the markets cool off a little bit, we get some pullback on workday, I would be targeting these locations right here, right? This prior earnings gap fill location, which is going to be about 244 down to about 235. This $10 range would be an area where I'm willing to bid a little bit on workday stock, but I really don't see any problems with the company, either for swing trades or adding to a tiny position in a long-term portfolio. I like, even though they're not exactly the same company, guys, I like Salesforce a little bit more just because of, it's a more legacy brand than Workday. And the financials of Salesforce right now are a bit more solid, right? They're two very, very good players, but Salesforce is a lot more established in their own niche. But Workday is the industry leader in resource management software as opposed to client management software, which CRM does, right? So decent company, nothing bad to say about their earnings at all. So that's pretty much everything for our earnings on Workday right now. Now let's dive right into our technical analysis on our markets, right? So moving on in, guys, very strong close to the week and a very strong close to the day as well. Keep a look right here, guys. Daily move higher is now pretty much set in stone. Looking for a daily higher low, guys. This last 4 days of inactivity or tightening range, this is some form of a bull flag. Even if we start to dip a little bit lower here, guys, because we noticed yesterday we lost the hourly uptrend, lost the 12 EMA in a big fashion, but the bears did not capitalize, did not give the hourly downtrend, and now we have resumed into a new hourly uptrend. So this is a tightening range at the top, otherwise known as a bull flag. Even a little bit more downside, guys, would not do any damage to the technical setup of this chart. As I've been saying, we would just be looking for maybe an inverse head and shoulder setup. Even if we start losing the levels and rolling over here, guys, we would just be targeting the same areas, right? 550 down to about 540, this little pocket right here, breakout, possible retest, and maybe run for the markets. That is if they just don't bear flag or bull flag right here, tighten up and just blast off through the all-time highs, right? So one of those two situations is highly likely. I would be a little bit patient and wait for this dip, guys. That's just the way that I like trading more rather than going for the breakout of the all-time highs right away. If you're looking for the all-time high trade, guys, unfortunately, especially on the SPY, I have to wait for a break and retest of the all-time highs. Then I can make a trade because then we actually have some stop loss levels, right? You can go for it here, but it's just not confirmed yet. You can have a tight stop loss and go for the all-time high break, but keep in mind your resistance is right there at the all-time high, right? So if you start breaking up and get rejected, that would be kind of unfortunate, which is why I always wait for confirmation one way or another, either the confirmation from the retest and run, or either the breakout, retest, confirmation, then you get your stop loss level, and then you target the further upside, right? All in all, though, the bulls are looking extremely strong. Very nice momentum on them by the week. And look at this weekly move by the SPY, guys. Absolutely ridiculous V-shaped formation. This is one of the most aggressive V-shapes that I have seen, guys, in 4 years of trading since the pandemic lows. So pretty much 100% recapture. So even in the event, guys, we lose this daily higher lows, move into a daily downtrend, understand the bulls have created a ton of space to reset this into a weekly higher low and possible further trend continuation, especially leading into those rate cuts. Rate cuts, guys, it can go either way. It really can. A lot of people, it might just be the way that I'm leading into it, guys, is probably going to be, we're probably going to rally into rate cuts, and then it might just be a sell the news event. Then we get another uncertainty batch all the way through the election cycle. So maybe something like this, right? Maybe just rally into the actual rate cuts. And then when the rate cuts happen, then we maybe get a little bit of dip, consolidation here, sideways or slightly downside through the initial phases of the election, and then possibly resume on here by maybe the late months of mid-October, possibly into early November as well, right? That's just how I see it, but obviously nobody has a crystal ball, guys. So we're going to take this one day at a time. Moving into QQQs. QQQs also trying to recover ever so slightly after yesterday's decline. So nice daily move higher. Looking for the daily higher low here, guys. Even if we dip a little bit more, understand there's nice support below us, 467 down to about 455. This pocket could be a great retest and possible rally for the Qs. Qs still a decent way off their all-time high, right? Still about 5% off their all-time high. So I wouldn't say that The bulls really have it in the bag right now. They can retest these lows and then possibly move higher. That's if we don't just do something like this right away. I would be more keen on waiting for dips on the QQQs. If you're playing the QQQs, I don't usually play the QQQs. I play individual names because then I can actually get my dips, right? But for the QQQs, looking very solid above the moving averages, and your next target of resistance, of course, has to be your all-time highs. So right here, I mean, there is a possible swing trade right now, guys. If you're trying to target it, I would put the stop losses very, very tight below the lows of yesterday, and then you would pretty much be targeting the trend expansion into the all-time highs. First stop around 495, right? So moving on into financials right now, financials breaking above new all-time high. This was a pattern we were noticing yesterday. Bull flag and now new all-time highs. Looking very good. Daily uptrend for the bulls. As soon as this move is topped out, could be looking for a higher low for possible further trend continuation. Where could we possibly pull back into? If we lead higher a little bit, guys, may just pull back into the prior all-time highs. Prior resistance twice, 1, 2, and 3 times, and now that could be acting as support for the bulls for a possible next rally higher. In the event we retrace everything and set the daily downtrend, understand the bulls have tons of space on the weekly, guys. Gorgeous weekly uptrend continuation would just be looking for a weekly higher low for possible further trend continuation. No red flags on financials whatsoever. And you guys know what my favorite two names are, guys. What are they? Visa and MasterCard, right? Such easy plays. Moving on to XLV. Healthcare, right? Healthcare, monster continuation rally by healthcare right now, looking very, very strong. In the event this move tops out soon, I'll remind you, we are just looking for a daily higher low for possible further trend continuation. Where could we possibly bounce off of, guys? Well, our all-time highs are a fair bit away from us now. So my best guess would be probably stopping out at the 12 EMA, a little bit of a retest at the 12 EMA, and possible run further. The bulls have created a ton of space on this one here, guys. So on the weekly as well, beautiful weekly uptrend in motion right now. So even if we were to lose this massive daily move into a daily downtrend and back into our prior all-time high level of support, just looking for a weekly higher low for possible further trend continuation, guys. And one of these stocks is actually respecting this pattern beautifully. UNH is kind of doing it right now, guys. Got the nice breakout of the all-time highs, 4 or 5 weeks of consolidation at, they grazed it. I wouldn't say they came down into it, but they kind of grazed it ever so slightly at the top of the range, right? Looking for possible further trend continuation, guys. UNH looking like a very, very beautiful setup right now. And the other one that I really like a lot, I mean, I can't tell you guys, well, it's not financial advice anyways, right? But I've been in Merck since the lows right here, going for the daily trend change. I like this one a lot. We are targeting up to about 120. Right now, the risk reward isn't very favorable, guys. So don't chase this trade just because I'm in it, right? You got to manage your risk first. The risk is all the way down here. $5 worth of stop loss, and the upside from here is about $5. It's a 1-to-1 trade. It's not as much worth it as it was down here, but happy for all of you who participated in this one with me so far. Moving into SMH right now. So SMH also carving out some gains today, up 2.46%, looking very good. Very sideways consolidation action at the top of the range right now, right? Where are we getting rejected from, guys? Very simply, this big line of resistance, right? So 257 down to about 249. And I do believe this could be possible potential resistance for SMH all the way through NVIDIA earnings. NVIDIA earnings, obviously next week. Next Wednesday is going to be a huge day, guys. Massive day for the stocks as a whole, right? Abercrombie and Fitch, Chewy, we get Kohl's, get Foot Locker, we get NVIDIA, CrowdStrike, Salesforce, Affirm, a few more below, Pure Storage, right? 5 below after that. That's going to be really the major day of the week. Going to be a big market moving event for semiconductors as a whole, guys. So be very careful on this one. We are still looking for a potential daily higher low in the event we are not able to hold these levels into NVIDIA earnings, right? So you saw the drop yesterday, loss of the hourly time frame, but did the bears capitalize with an hourly downtrend? No, they got rejected by the bulls. Bulls back on an hourly uptrend. So in the event we make a second attempt at this area, fail, it set up the daily downtrend right there, then you understand we're just looking for some possible weekly consolidation, and then we get some NVIDIA earnings, right? So even if Monday and Tuesday are a negative start to the week, it's going to pull us down to this area, and then NVIDIA can do one of two things. We're either going to set a new weekly move higher in motion off of very bullish earnings, or we're just going to start retracing more of this move. Tons of space to set up for the weekly higher low for possible trend change on SMH. All in all, guys, looking fairly good for semiconductors. And I took 2 semiconductor plays today. I mean, I've been taking them this whole entire time. We've been dropping and consolidating, right? But new plays, I'll show you them at the end of the video. Moving into IWM Russell. So IWM having a very good day, 3.19%, definitely responding very well to our rate cut narrative, right? That's what we were waiting for IWM. So I stand corrected, guys. I was possibly expecting a larger retest of this range down here, 200 down to about 190. This is that huge area that we kind of struggled to break out of all year. And now we pretty much just retested it and ran another legendary V-shaped formation, guys. Usually when you get such a big loss of momentum, 100% retracement, this type of V-shaped move, guys, it is so improbable. You're talking about maybe 2% odds of having a massive V-shaped recovery like this. You don't very often see it at all, right? So very nice to see the bulls be able to put together such a rally. In the event, we need to consolidate a little bit before reaching the higher end of resistance at about 225, just possibly looking for a daily higher low. Anything pretty much above at this point, down here would be your most recent higher low. 212, just looking for a higher low for possible further trend continuation. Beautiful daily uptrend in motion for the Russell right now. So the bulls back in full short-term control against many people, even mine's expectations. Congratulations to you if you actually stuck with the trade, guys. Diamond handed it. It was an unlikely scenario, and now you are able to reap those rewards. Congratulations. I did not take this one myself, but I know a lot of you guys have continuously played it throughout. Moving into the Dow Jones right now, 1.14% to the upside, looking pretty good, guys. New daily uptrend on the Dow Jones, looking very good. Not quite close to breaking the all-time highs just yet, just a few points away still. We'll be on the watch for that over the course of next week. Obviously, guys, one of two things is going to happen. Either we break to new all-time highs, set up for the breakout, retest of the prior all-time highs, and possibly run, or we maybe fail those all-time highs, guys. If we fail and roll over into daily downtrend formation, you guys know, just looking for a weekly higher low, guys, anything pretty much above 38.5, just looking for a weekly higher low for possible further trend continuation. The bulls are in control of everything, guys. Monthly control, weekly control, and daily control as well. The bulls have gotten everything back over this past 2.5 weeks of rally. So congratulations to all the bulls out there. Now moving into crypto. Crypto had a big move today, guys. I don't cover crypto that much, guys. Especially when we range bound move like this, right? But when we have big market moving days where we reset up new daily uptrends, then I'll cover crypto more specifically, right? So moving on into Bitcoin, new daily uptrend has now been officially set in motion, guys, blasting through our overhead resistance, which was pretty much, at that point was about 2.5 weeks of resistance right there at about 61.5. So in the event we have a little bit of retracement from here, going to be looking for a daily higher low for possible further trend continuation. The bulls now finally have the daily uptrend back in control. What are we looking for now? Second, guys, need to get this weekly back in control as well. I would like to see us come at least as high as 67.68, set up the bulls for a possible weekly trend change and maybe break. Now, I also do think, guys, that Bitcoin is going to rally possibly quite well into the rate cut cycle and maybe even thereafter beyond. So this might just be the actual all-time high breakout run. If it is not, I do believe it's coming in 2025. We still have not really had any more price discovery since the month of March. So it's been a long time coming. And usually when assets consolidate at the top end of a move like this, guys, is a monthly bull flag, and we are expecting big continuation follow through. So looking very good on Bitcoin as a whole, guys. Very happy that I added to my positions right here, both in the long term, and I did have a few swing trade positions that I was able to close today amidst this price action, looking extremely strong. I will be a dip buyer if we retest the 615, looking for a possible trend continuation. Ethereum also looking not too bad at all, we just ended the day up 5.36% today, but Ethereum is just not as strong as Bitcoin, guys, right? When you look at this chart, you see how many more levels Ethereum has lost than Bitcoin. Bitcoin's done a better job at protecting its price, right? So in terms of Ethereum, yes, we are now setting up for the daily trend change. We got that, barely breaking up above 2,700, guys. There's a big level above us, however. This yellow line right here, 2878. That would be a big resistance point for the bulls. So if ever we cannot breach this level, we're going to be looking for a daily higher low for maybe a second attempt at it. The Ethereum bulls have a lot of work to do though, guys. Weekly downtrend heavily in motion. Need the weekly bounce to be a lot better than it currently is, right? The weekly bounce right now is only about 45%. Need to get at least as high as 618 if they are to do a two-step recovery process of the weekly uptrend. The monthly isn't looking all that bad, right? Yes, we did lose the monthly uptrend right here, monthly downtrend in motion, reacting beautifully from this big zone of support though, 2,700 down to about 2,200. I've left this box on this chart, guys, for pretty much a year at this point. So funny to see that it continues to respect those levels as a whole. So Ethereum still does get a little bit of a bid from me, guys, but I'm kind of getting, I'm kind of favoring more Bitcoin now for the upcoming rally more so than Ethereum. People just, I've been in crypto every single day, guys. Don't get it twisted, right? Even though I do only cover these maybe once or twice per week, I put at least 2-3 hours into crypto every single day, either day trading, swing trading, establishing new positions and stuff like that, right? To be quite frank, people just are not using Ethereum as much as they were back in 2020 and 2021. The new Ethereum of this cycle right here, the one that's being most used is Solana. So my positions, my largest positions in crypto right now are Bitcoin and Solana. Ethereum has now dropped to position number 3. I do believe Ethereum can still rally back to maybe the $4,500, $5,000 level, guys, but maybe not much more than that. People just aren't using it as much as they used to. They've replaced it by other chains that are getting a lot more notoriety right now. Moving into our big tech names now, shall we? So moving into Apple, give me a very quick second. And let's get into it. So Apple up a nice 1.03%, even though Apple has rallied so hard, guys, barely consolidating at all, right? Just really 5-6 days of sideways price action. The bull's in full control right now. Every single time the bears try to put in a move, they cannot capitalize and set up for the hourly downtrend. So as a whole, you do not have any downside daily consolidation. However, if that changes into early next week and we do consolidate, you guys know what we're looking out for. 219 down to about 215, big area of support for the bulls, possibly for the daily higher low, and maybe reset into the new daily uptrend higher. Because this is just one single daily move. They haven't even set up the daily higher lows just yet, right? You can argue that since we're in the capacity of a bull flag right now, that these are the daily higher lows, right? But that remains to be seen. One thing's for sure, I cannot really take a position in Apple up here, right? It's just too risky. I mean, there is a tiny little swing trade with a tight stop loss. You can try and take a long for the bull flag breakout to all-time highs, right? And the stop loss goes below the lows at about 223 right there. That is a trade opportunity, but a relatively very tight trade opportunity to say the least. You pretty much get wiped out with one negative day, right? Much better opportunity to possibly wait for the bulls to retest this big zone of supply. Then you possibly get some better price action entries as a whole, and you can set some wider trade parameters, right? If we come down to these lows, 216, 215, then your stop loss goes down below here around 207. So you'd have about $7, $8 of downside risk. And then where are we targeting for the upside? Well, the upside targets are 228. That's $12 for your first TP. And then the all-time highs for take profit number 2. So much better trade in that location. I cannot play Apple up here at all. I'm going to be waiting, guys. If I can see Apple back 205 down to 200 in the next few months of trading, I will be interested in playing it there. But I'm not chasing it up here because of the valuation and because of the slower than expected revenue growth. Moving on to AMD right now. AMD up a nice healthy 2.16%. So daily higher lows right now, guys, are set, right? We consolidated enough at the lows. Even though the bears did not break through, we do have some downside consolidation, broke pretty much our stair-step pattern of higher lows every single day. And now we have the daily higher lows trying to be established by the bulls. They're not set in stone just yet here, guys, because we are struggling to recapture that hourly uptrend. So as a whole, I am not yet defined that this is your daily higher low. If we further consolidate, guys, then we will get better pricing in my humble opinion. I am looking for, if we do retrace here, getting continuously rejected from the support range or resistance range, 163 down to about 154. If we get rejected and proceed to move lower, that's going to free up a ton of trades into my designated area, which is pretty much starting at 141 all the way down to about the midpoint of about 135. I would love to be writing some short puts down below in that range because we're just looking for the daily higher low for possible further trend continuation. We will also be maybe looking for the weekly higher low for possible recapture of the weekly uptrend. So another test in this location, guys, maybe the last chance that we can get AMD before they proceed on to a beautiful weekly rally. Their fundamentals for 2025, guys, are going to be amazing. 2025 is going to be their best year. You just have to look at the fundamentals, right? This is where all their data center revenue and EPS gains are coming in. Look, the EPS ramp does not start in 2024, 25, 26, 27. Look at this revenue ramp, right? 2024 is largely the same as the last couple of years. 2025, 26, 27. That is where your exponential growth starts, and people will be starting to position for that if we get some nice little retests of these lows. So that's the trade setups that I like on AMD. Moving into Amazon. Amazon also up 0.52%, but not moving too much higher, right? So Amazon is still kind of in consolidation mode. If we were to drop a little bit lower here, guys, I would be targeting swing trades around the 200 daily moving average and also closer to this big zone of the end of support, right? 165, big support down here. That was where we bottomed after this earnings before the Black Monday, of course. That's where we bottomed after last quarterly earnings. And that's where we also established the first base of support 2 earnings cycles ago. So I like this area right down here, 170 all the way down to 165. If we dip a little bit lower, we are going to get some strikes open there for writing some short puts, writing some put credit spreads all the way down here, and possibly even some call debit spreads and maybe even some leaps. I will be looking for some leaps on Amazon if we start retesting these lower levels here, guys, right? So that's just the trade that we're looking out for on Amazon. All in all, looking very good. Weekly bounce is very good too. We know that we lost the weekly uptrend. Now it's up to the bulls to get it back. So any retests, guys, are going to be for dip buying opportunities for the bulls. The bounce size has been good, so we can make a little bet on the bulls. 61.8 retracement. So whenever we move lower here, guys, for setup for a weekly higher low, I am going to be buying the heck out of this dip, going for that weekly trend change, because who is in control here? Your longer term bulls are in control, perfectly acting as support is your previous all-time highs, right? Moving into Google right now. So Google also up 1.17%. Everything was up today. Looking very good. Google just looking to continue the establishment of this daily uptrend right now. So we'll be keeping a watch next week if they can break 170.22. If we get continued daily uptrend action, just looking to maybe stall in this area of resistance, right? 179 down to 172. Big area of resistance here, guys. So in the event we get rejected early next week, we'd just be looking for a daily higher low and then maybe start incrementally moving higher into it. Now, in the event Google does the opposite, rolls over too much, sets up for the daily downtrend here, guys, just understand that we may just be looking for a weekly retest of the lows right here. Google's bounce size was not the best in the game. Only a 35% bounce, quite weak. So the bulls do not have high probabilities of being able to reset into the weekly uptrend, right? If anything, it does favor the bears for a retest of the lows or even roll over. One thing's for sure though, if we do come down back here on Google, guys, I will continuously be playing Google. Lower 160s, I like it. Mid 150s, I like it even better. Will be dollar cost averaging and building this position out on Google. If we do retest, guys, the lower 160s, I'll probably be looking for a lot of debit spreads, call debit spreads, and maybe even some leaps on Google too, because I think they were really unfairly hit over the past couple of weeks with the Department of Justice lawsuit and possible breakup headlines, right? That's why their bounce has not been as significant as other big tech names, but I really like them. The valuation is great down here. Moving into Meta right now. So Meta down about 0.74%, not the best day for Meta, but they're still struggling with the all-time high breakout, right? Very nice consolidation at the top end of the range. So once again, we are looking for 2 simple trades. One is going to be the breakout of the all-time highs, then maybe retest again. You can argue that we've already broken out of the all-time highs and we're retesting this big area of resistance now as support, right? 530 down to about 514. And this is true, but I wouldn't say we have it in the bag just yet, right? We're not so considerably above the all-time highs that we can say we've officially broken out of them in a very decent fashion. So really on the fence for Meta right now. Now, in the event that we do retrace here, guys, and break the lows of last Monday, well, we're going to be looking at a new daily downtrend and possible weekly consolidation. Meta is just going to be in a possible consolidation range in the event we continue to drop right here, just possibly looking for a weekly higher low and then maybe a second attempt at the all-time highs. I love Meta, guys. If we can find Meta again under $500, I will be looking to play this one a bit more heavy, both with short puts in this area right here and also some put credit spreads at the lower range and possibly even some call debit spreads too. That's if we revisit 500 to 495. So keep your eyes peeled. Moving on to Microsoft right now. Microsoft up 30 basis points and very decent day for them. Microsoft was actually testing some lows today, 412. So Microsoft trying to find the daily lows. So I'll remind you what happened here. Microsoft had the daily higher lows, daily uptrend, rolled over and lost the daily uptrend right away. So that's very unfortunate, but what is Microsoft looking to do very quickly? Looking to set up for the weekly higher lows for possible further trend continuation, trying to get this weekly trend change back to the bulls, right? rejecting very nicely from our area of resistance that we had labeled on the chart, 436 down to about 423. So that is normal price action. But one thing's for sure, Microsoft is coming down into our target territory, guys. The closer that we get to 412, 410, the closer that I am to writing some puts down here, 405, 400, 395. Put credit spreads down here are a very juicy opportunity too. And if we dip a little bit more, I'll possibly be looking for some call debit spreads as well with about 2-3 months of time. Microsoft looking excessively good, guys, on this retest. So do not fade this one. If we get this pricing again, guys, this might be our last opportunity to buy some Microsoft at these discounted prices before we maybe embark on a rate cut rally and then have some uncertainty, right? So we can rally quite a bit from here and then maybe consolidate maybe in the 420, 430 range. I don't think, guys, unless the recession headlines get really bad and the data runs away from us hard to the downside, very possible that we may not see Microsoft lower 400s again for the year. Moving on to Netflix right now. Give me another quick second. So moving into Netflix down about 0.32%, but that's okay, guys. Netflix with tons of space right now, looking for a daily higher low. So pretty much anything above 585, just going to be looking for that daily higher low for possible further trend continuation. This is very nice consolidation. How do you know the consolidation is done, guys? You should know this by now. When the bulls recapture the hourly uptrend, you know your daily consolidation is finished and that you're most likely looking for a new all-time high. So this is a very shallow pullback. This is what I love to see, guys. Massive move and consolidation at the top end of the move, respecting our prior zone of resistance. This whole area right now is going to be acting as some support for the bulls, right? So I would not be surprised if they're able to protect all the way down to roughly 670, 665, and then possibly manifest for a further leg, bringing us in to new all-time highs. We are almost there, guys. We got it this week and then came slightly back under it. In terms of the weekly is looking very healthy, guys, in the event that even if we lose this daily uptrend and go into further consolidation for a few weeks, guys, looking for a weekly higher low for further trend continuation. I will be keeping an eye, guys, if I can find some premium down here, 655 down to about 630 for some put credit spreads. I would not be opposed to doing that. If we come down even lower, that is what I'm going to be attacking here for some call debit spreads with maybe 2-3 months of time. Moving into NVIDIA, well, NVIDIA, guys, performing very well today, 4.55% to the upside. So NVIDIA has earnings next Wednesday. Not that much price action before them. So going to be very tough to derive some estimates in terms of price action because NVIDIA moves about 10% after their earnings, right? So moving on in, guys, very nice sideways consolidation. Very possible if the market bullishness continues into the early part of the week, very possible we even start retesting some of your all-time high regions prior to the earnings, guys. That would be worst case scenario for me because I want a little bit of a dip leading into earnings because then if we get an earnings pop, that is going to really do some wonders for those positions. And then even if we get some declines after earnings, guys, well, at least I'll be able to position myself. If we get a dip down here, I'll be positioning myself with short puts all the way down here, right? So even if we get a dip after earnings, I might be assigned at a very good level. If it runs away from us, guys, I'm probably not going to chase, to be quite honest with you. But looking quite good right now, so really trapped in the sideways range. Obviously, a break to the upside means your daily uptrend simply continues. A break to the downside here, guys, just means that your daily consolidation remains underway. We're targeting supports down here, 119 to 115. I would love if we can pull down to the 119, 115. That is going to be a nice opportunity once again to write some short puts down here prior to earnings, because that's where I really want to buy the stock in the event that we come down there. On the weekly, looking very good. Weekly has been almost entirely recaptured. So even if we do have a lackluster earnings by NVIDIA, pretty sure that the market's going to brush it off after a few short days, come down like this on the weekly, reset in for maybe a weekly uptrend into the later part of the year. So we'll take this one day at a time on NVIDIA, of course, leading into their earnings. Moving into Tesla right now. Tesla with a very healthy day, 4.59%. Also an inside day of trading for Tesla. Daily uptrend, very nice right now. Daily higher low is set with the low of yesterday's trading, right? Big loss of the hourly time frame. And now a recapture, so we can say our daily higher lows are set. And we're just going to be looking for a possible continuation of the daily uptrend. Where's your next level of resistance? Right here at about the 233. Now, in the event that the bulls cannot get it done and we roll this over here, guys, into a new daily downtrend, just understand your weekly lower highs are set. And then we're going to be looking out for the bulls. Can they dive into a tightening range, right? Pretty sure that Tesla's going to be able to protect these lows and not roll over into a weekly downtrend unless the overall market really goes to the dumpster, right? the best we can do right now is expect somewhat of a tightening range. I would be highly surprised if Tesla pulls off the massive V-shaped recovery. They just don't have many catalysts for it right now. Certainly not until that robo-taxi event or until those Q3 delivery numbers come in. All in all, though, looking good. I will still be patient on Tesla. I'm looking for a dip here, guys. If we get a dip back into the lower 200s, it'll probably open up some premium to be writing put credit spreads or short puts below 180. I want to be between 180 and 175. Going to be quite greedy with this stock. I do not quite trust it just yet, even though the positioning right now is looking not too bad, and the bulls do look like they have a very nice bounce underway, guys, right? Any negative news for the EV market or auto market as a whole, even with declining interest rates, is not going to be too good for Tesla. Right? You guys want a good, I know Tesla is more than a car company, right? But let's be honest with ourselves. Full self-driving, right, is still a long time away from it being perfect. The software is very, very good. I've driven in cars that have FSD12 and it's been very good. Haven't driven them myself, but I've been a passenger in them and it definitely feels a lot better than the software it had just a few short weeks ago, like FSD9, FSD10, right? I understand all this. I understand Optimus as well, right? I understand what they're doing with the new battery cell technology. I understand their outsources of production technologies, like they've been possibly licensing to maybe talks with Volkswagen and Toyota soon and stuff like that, right? All these things are great. Their energy storage business, but they're far into the future until it becomes actual monetization for the company, right? At least on a larger scale than it is right now. You guys want to see a pure form car company, the best performing car company, guys, that has an extremely wide moat. I'd argue that Tesla has a moat in some degrees, but look at Ferrari, right? Ferrari has none of the problems as that Tesla does. It doesn't really compete with anybody other than very high-end luxury vehicles. Ferrari's newer editions, guys, you know this, right? They come out with editions, limited editions of 500 to 1,500, 2,000 new cars, and you have to be on a specific list from Ferrari. They have an exclusive moat. That is the strength of the company, which is why the stock continues to outperform. This is my favorite vehicle stock as a whole. Forget EVs as a whole, guys. Forget EVs versus ICE vehicles. The best metrics for any pure form car company, car business right now is Ferrari. So moving on down to Palantir. Palantir looking very decent right now, 0.44% to the downside. We've been expecting that though. Nice little consolidation range on Palantir right now. If we were to continue this consolidation here, guys, I'm really waiting, right? Even if we just bounce from here and maybe retest these highs, that's a very distinct probability, but I am waiting for a possible retest of the $29 to $28 range. That would only happen, guys, if we get more significant weakness over the next week, maybe more uncertainty factors as a whole. If we get the infamous breakout and then retest of this 29 to 28, guys, I will be looking to maybe write some short puts, 27, 26, put credit spreads possibly. I mean, Palantir's a cheap stock. Usually you can't get much premium on those put credit spreads anyways, but even maybe call debit spreads with a few months of time. Just be careful up here, guys, just because, yes, not only are we coming into a big area of resistance, 32, 33, but the valuation now of Palantir is very, very, very high. It's a great company. I love the company. I own the company. I bought a lot of this company when it was trading between $8 and $11. But I have to realize, guys, you got to say it how it is, right? The valuation right now is very, very, very high. So we need to be a little bit more diligent and greedy on our pricing. So I will be looking for that back test, but you know, they may just never get there. We may just bottom out at the 12 EMA and then maybe move higher. Keep an eye on this hourly time frame, right? As long as we're in an hourly downtrend, daily consolidation will continue, and then it's up to the bulls. We get a very deep retracement, set up for the lower high, lower low, daily downtrend. That would be when the weekly move into there will be opening up some positional trades, right? Palantir can do that consolidation for a long time, even without an overall market weakness environment, right? It does it all the time, right? Where it just consolidates for extended periods of time. So just be on the lookout if it embarks on one of those consolidation journeys again. That's pretty much everything we had, guys, in terms of our daily stock rundown right now. Now let's jump into a few of my portfolio positions. So here's the portfolio, guys. Before we get into a few of the positions that we still have, of course, let's get into the ones that we closed this morning. Today was a very profitable day, guys. Realized pretty much almost $500 in profits. Right? Just a combination of our earnings trades yesterday and the short puts trades that we took yesterday as well. So take a look, guys. We did make a few swing trades on NVIDIA. The 117 puts, we got them yesterday, and the 114s closed for pretty much 95% profit today. You can see those right here. Wrote the 114s for about 20 bucks, wrote the 117s for about 35 bucks, and we closed pretty much all of that juicy premium over the course of this morning. Thereafter, what did we do as well, guys? We also got rid of a few trades that we had too. Airbnb, the 113s, you guys remember those from yesterday too, got $19 for them, closed them pretty much today for almost worthless at 2 cents. Very easy, 1 day in and out trades, guys. Then we also bought back our Google 162.5s. We wrote these a couple days back. I don't think I could find the trade. Probably going to go through a lot of them, right? Oh, actually, they're right down here. Sold them for almost 40 bucks just 2 days ago. Very good weekly ROI on those. And then we had to close them today for pretty much essentially worthless 4 cents. Then did we close anything else? I think that's pretty much everything else that we closed. Rolled some Google calls, and then we also closed a portion of the EVVTY position, guys. You remember we bought these pretty much at, I'll show you guys, we bought these at back here, right? This was our last purchase, August the 12th. So we've been in this trade for literally 10 days, right? Not even 2 full weeks of trading. And we bought them at $94.72 and we closed them today almost $10 higher, guys. That's pretty much for all intents and purposes, 9.5%, 10% in just a few short weeks of trading. Not sure if anybody followed me into this one. I was very clear as to the reasoning why behind this trade. Huge area of monthly support. The company is one of my favorite businesses, huge profit margins, very attractive valuation, and we were approaching pretty much daily oversold conditions after our earnings. So when I saw the establishment of a possible daily high or low scenario, I got in on this candle right here. And it's been nothing but up ever since. Why did we close half the position today? Because they started touching the top end of our resistance band. Our next take profit is all the way up here at about $110, right? Don't worry about me, even though I might be cutting it short, guys, right? I have some shares in my long-term portfolio. I will be fine. This is just a very quick swing trade in and out. So we closed half of the position, still have the other half. It was a very small position as a whole, guys. It was only pretty much $1,000, right? Because I want to show you what you can do still when you take only $1,000 positions. You can actually get some very juicy rewards in terms of ROI. Always focus on the ROI per day. The dollar amount will come, guys. The reason I want you guys to focus on ROI per day is when you start trading, like some of us do, right? With 6-figure accounts, very large balances. The dollar amount, if you focus on the dollar amount, guys, it will get to you psychologically when you see minus $2,000, plus $2,000, plus $5,000, right? It will psych you out sometimes. But if you're focusing on the percentages and the risk versus the reward profiles, that is when you're going to be able to scale up your trading accounts. But for now, I've included, especially over the last 2 months since you guys asked for this, I've included a lot more small account trading strategies, right? Put credit spreads, call debit spreads, and just little swing trades with some shares. So hopefully you guys appreciate that as well. And we also closed the Bitcoin position as a whole, closed it in 2 batches right here. You can see we closed the 17.5 calls for about $13.15. We got these for about $11 or something. So this was a very hefty profit, guys, over 15% in just a few short days of trading. We opened this one literally like Thursday of last week, right? So pretty much a full week of trading. We also closed our swing trade shares as well. Close them in 2 different parts. If we want to pull this up, right, you can see that we bought right here 46, right, at a price of $27, so 46 shares, and we closed them for the most part at $30 over the course of the day today, right? So this one here sold short. For some reason, I loaded up my sell on the interactive brokers, and it loaded up 100 share sell, and I had to buy them back at the same price. Instead of selling the full position, it sold literally 100 shares instead of 46, right? So mistake on my part. At least I was able to close the same batch for not a loss at all. But we did have some very, very good profits on this one. So I'm very happy with the way this trade played out as a whole. Very, very good position management, very good entry on that Bitcoin 2x leverage ETF. That's pretty much all the ones that we closed, guys. So very good profits on those. The ones on Bitcoin, of course, was, let's just call it 46 shares times roughly about, let's call it about $3, right? Just about $3. So that's a nice little profit, about $130 right there. Plus the call premiums, all in all about $300 on that very small Bitcoin trade. Now moving into the positions that we do still have, guys, a lot of them expired worthless today. You'll see in the portfolio. The ones we opened, the new ones, AMDs, 141s. I literally got almost the low of the day this morning. 141s for next Friday, 90 cents. They're already down to 56 cents, looking very good there. The rest of the trades, we got assigned ATD at $80. Going to be looking to write some covered calls on this position. I love this company so much. Look at this chart. It's just solid company, guys. Even if we come down lower, guys, I'll probably throw in an average in. If we come down lower 70s at that point, I'll average in. If we get a little pop early next week, I'll be writing some covered calls at my $80 sign strike. Really not nervous about this one at all. Moving on down further, the only other ones that we have for the time being, right? All the other positions, guys, we've already went over these. Baidu's, we've went over them. These bills, we held them for earnings, right? Worthless. They'll be called away from the portfolio today. Pretty much, so collected all the profit there. CP, those have been doing really, really well over the past couple of days. We're up nicely on those. John Deere bull call spread, still have those. The Disney trade, still have those. Domino's Pizza, this one expired worthless today. Domino's Pizza ending at 425. So we collect this very easy put credit spread that we put on 15, doesn't seem like a lot of money, right? But my normal size on these, like I'll go like 5-10 contracts, right? So for this one, 15 divided by $500, you would have made 3%. We wrote this one on Tuesday, right? So 3% in 4 days of trading, not bad ROI. We look for the ROI versus the capital used, guys. Most important metric at all, EVVTY, you can see still have half the position. I did the same thing with ASML. You remember me selling half of my ASML position, literally exactly where I said I was going to sell it at the range of resistance, right? We sold right here, guys. We sold 940, 2 shares of ASML, and now we're looking for maybe take profit number 2, which comes closer to the $1,000, $1,020 level, right? But I will hold if we re-dip below my average, I have a stop loss order at my cost, but for some reason we re-dip in this area, guys, I will redo this trade again. Such a very solid company. For now, though, just maybe looking for maybe a head and shoulders. I like this one, but my stop loss is at break even. You might also notice one that I didn't show you guys. That's true. One that I did not show you is McKesson. You guys remember I had the McKesson trade, guys. We got pretty much taken out at our break-even price. So McKesson was a very nice trade idea, but unfortunately it came back and took us out. So we didn't get the best pricing on this one. We got about 552.50, which was this right here. We were expecting for a more significant rally and pull up, right? But whenever I start to get some gains on a position, guys, right? Our initial stop loss was down below here. When we actually set up the daily uptrend, I moved the stop loss to break even, guys. I'm not going to round trip money into a loss, right? So unfortunately, this one came back and took us out at break even. You could pretty much see that right here. Tiny, tiny little position, got in 552.12, and then now 552.42 got back out. Pretty much a stop loss on the trade. So we didn't lose any money. That's what's essential. So managing positions, guys, is just as important as getting in to the actual position, right? Now, moving on a little bit further. We still have some Google covered calls from a position we got assigned a long time ago. Continuously rolled them now. The 165s, our average cost on this Google position right now is about 163.5. So we are now profitable on the position. We'll see how this one remains to be going. I did buy back my Canadian banking shares as well. Then moving on forward, Intel's moving pretty good. And here's a position that I opened today here, guys. Intuit. I went pretty heavy on Intuit as a whole here, guys. So we had the Intuit bull put credit spread, bull put credit spread leading into earnings. Intuit ending above 595 or 590. So we get to collect all this 20 cents. This was a 1 day earnings trade, guys. 20 divided by 50. 20 divided by 500, it's 4%, right? 4% in a single day of trading. I'll take that every single time. Today at the drop, when Intuit was down about 7%, guys, around 612, 613, we went with some bull call debit spreads for January. A lot of time left on these. 630 versus the 640s. 455, going to be looking for almost a 2x on these. If I can get $7 in the between $7 and $8 range, I'll be closing this contract looking very good. I also picked up 6 shares with an average cost of $6.23. Didn't time the bottom, guys. I just bought 2 different batches. As you can see, unfortunately, it doesn't show my 2 different buys, but there was 2 different buys. One at about 625 and the other one down at about 616. The first buy was for 4 shares. The second buy was for 2 shares. That's why my average cost is closer to the first cost. But Intuit, guys, kept saying, right? I literally said this last earnings. I said, up here is a little bit of a risky bet, but if for some which reason we could find price action, come back down there again and pick us up, I'd be looking to buy the heck out of the dip on this company. Such a solid company, guys. The fundamentals of this business are absolutely amazing. So when Wall Street gives you a dip buying opportunity like this, we have to take it, guys. This is like buying Microsoft, right? Same concept as a whole. So looking pretty good there. In terms of the rest, if you want to take a look, still have our Microsoft positions right here, haven't changed there. The MRK are moving nicely. Oxy as well, we're going to look to recapture those. Or I mean the $56 puts, right? Recapture all the premium. These ended above 56, so we just pretty much put all that in our pocket. Micron as well. Micron $92 puts. We wrote those at the low of the day almost, guys. Micron a decent level at 92 for about 49 cents. That's 0.5% for next Friday. They're already 50% profitable. Maybe even able to close them on the Monday session. We literally got them all the way down here. 92, why I like it, guys. It's the lower end of our big box of support, excuse me. Thereafter, guys, PayX. Position moving nicely. We wrote some pin duos, 120 puts for earnings. This is a 2 standard deviation move from the earnings expected move, right? $47 in premium, so we will see how those go. I like pin duo around that level though. 120 is pretty much, for all intents and purposes, all the way down here in our larger area of prior weekly support ranges, right? So that's what we're targeting, always 2 times the expected move and a big weekly support level. Qualis, not moving too much, but I like this position. Symbiotic, 19.5s we get to collect. Pretty much all of this $60 position because it ended well above 19.5. No problem there. UPS moving okay, and Visa moving okay as well. That's pretty much everything in terms of our portfolio, guys. So these are all the trades, right? I show you guys the trades every single day. That's pretty much everything we had for you guys in today's video. Now let's jump into the Discord. So these are going to be what we're going to be offering, what I'm going to be offering in the Discord as a whole. So you'll have 2 tiers. The first tier is ready. The second tier, I'm still trying to gauge interest and also gauge how I will structure the actual process. But let's go over this one first. So what I'm opening tomorrow on Saturday will be for premium Discord members. So what do we have here? Private live streams every Monday to Friday. You will get to spend the morning, a part of the morning, with me from 9 a.m. to 10 a.m. So obviously we're going to do some pre-market prep, the market open, and then possibly some live trades between 9:30 and 10. I'm a little bit flexible on this, guys. Some days we'll roll through 10:15, some days through 10:30, some days we'll just end it at 10. All depends on the day. Short-term trade alerts, obviously you guys will get those. Those are for 1 to 3 week trades. Options, shares, futures, and crypto. Longer-term trade alerts as well. The 1 month plus timeline trades that I usually take on the channel. You'll get those alerts, either leap calls, shares, or crypto. Long-term portfolio buys or sells. Yes, I will be showing you guys my long-term portfolio, my capital allocation for each position, and whether I buy or sell some securities in there. So we also have some high conviction trade ideas and setups, guys. The ideas and setups that I usually share in these daily market recap videos, you'll be getting a lot more in-depth trade ideas and setup with a technical analysis on the chart, why I like the position and everything, and where I'm potentially looking on at taking it. So at least you can follow on. These will be few and far between, but when I do take these, I usually take them with some size because they are high convictions. Then we're going to be doing some exclusive video content, guys. At least once per week, I want to put out a thematic video for all our premium members, and those will be videos that you guys are going to request. I'm going to be posting surveys in the Discord, and whatever themes you guys vote for the videos, whether those are in-depth videos on long-term portfolio construction, thematic videos for certain sectors that you guys want, it's going to be up to you guys. And sometimes, obviously, I'll have my own ideas to do, exclusive video content that I will not be repeating on YouTube at all. We'll also have some real estate deal analysis too. If you guys didn't know, I'm heavily involved in real estate as well. I've done a number of deals under my belt right now, talking about the BRRRR strategy, right? Buy, and then you buy, renovate, refinance, and then rent out strategy. I've pretty much done it over the past 3, 4, 5 years, been working well. We don't talk about real estate much over the last year or so because of interest rates, right? But deals may be coming around the corner. So if ever you have a deal, I will show you guys the deals that I have done, the numbers on them and everything. And then if you guys want to show me any deals you're possibly looking into and want my opinion on there, there's going to be a whole section for real estate deal analysis. And then obviously, guys, you get to chat with me, which is a very good perk, right? So I'll be able to answer your questions in chat on a best effort basis. Obviously, don't write me a massive 3-paragraph question thesis on everything, guys. It's going to be for quick questions and replies, right? More specifically for this question, but I will be in the Discord, guys, every single day for probably over 12 hours a day, 9 in the morning through 9 o'clock at night. I'll do my best to really keep track of all your questions, answer you, and engage with everybody in the Discord, right? So the benefit of this is if you are early into the Discord before we grow and everything, right, we'll obviously have more time to be more engaging with you specifically, right? As I said, on a best efforts basis. Obviously, if there ends up being, hundreds of people in there and everybody is tagging me every 2 minutes for questions, then it gets a bit hard to answer everybody, right? So this is just the initial pipeline. There will obviously be more things that I'll be adding to. So I hope you guys enjoyed that little presentation. As I said, I will be going live with it on the channel tomorrow. So hopefully I will see a few of you in there with me as well. Obviously, no pressure. It's not a sales pitch. It's just for those of you who are interested or on more personable interactions with myself and for a lot of my signals for trading and also long-term portfolio construction and stuff like that, right? Because a lot of channels, they either focus on either the long-term or the short-term, but not a lot of people do both, trying to build your wealth as an individual as a whole, right? So that's pretty much everything for today's video. Hopefully you guys enjoyed that. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. Would love to have you back in a future edition of these videos. And lastly, if you have any questions at all, guys, now's the time. Leave them down below in the comment section. You want me to look at a stock, technical analysis, an options play, economic discussion, anything you want, guys, leave it down below and I'll be more than happy to answer. Take care. Have a beautiful weekend. I will see you over the course of the weekend, of course. Take care and peace.